So after the Great Depression, or the stock market crash of 1929, Black Tuesday, they call it, um, a lot of people think that, okay, the stock market crashed, that means all the stocks crashed, but that isn't necessarily true. By early 1930, there were a lot of companies that were actually making more money than before the crash. And I'd like to point out one of the companies in particular to you, and draw comparisons between then and today. That is Campbell's Soup Company, stock symbol CBP. And as you all know, Campbell's makes soup, canned soup. You can look at the company profile here. They manufacture and market foods and beverage products. They operate through meals and beverage and snack segments. And they also own Swanson, which is another soup brand. And they own Prego pasta sauce, Pace Mexican sauce, and Pepperidge Farms. I'm sure you all heard of them before. It's a food company, all right? Everybody needs food. The thing I want to point out is their P ratio is extremely low right now. Price earnings ratio, 9.96. The lower the P ratio, the cheaper the company is, meaning the amount of earnings to make basically how many years before they pay off the value of the company with their earnings, and it's only 9.96 right now. So they'd make their market capitalization in earnings in just less than 10 years, which is pretty good. Any stock that has less than 17 P ratio is pretty good right now. And this one only has 9.96. Top onto that, they have dividends, and top onto that, a lot of the goods that they sell are non-discretionary, meaning people are going to buy them regardless of whether or not they have a job. They'll be needing to buy food. And it's not super expensive. It's not a luxury good. So regardless of people's income ranges, they'll be buying this. In fact, if there is a recession, you might see more people buying Campbell's soup than before, and their related products. After the Great Depression, in 1930, Campbell's actually made more earnings than when Black Tuesday hit, like I said. So Campbell's is a company that has actually proven itself to actually make more money when there is a depression. So the title of this video is depression proofing your stocks. So I'd like to say Campbell's is probably one of my top picks in depression proofing your stock portfolio. So maybe sell some Tesla and buy some Campbell's just in case. The reason why I think it's better to hold stocks than cash is because I think things are going to go one or two ways. Either there's going to be a stock market crash when the government stops making money and stops buying ETFs and stops keeping the interest rate super low, or the US dollar is going to experience a little bit of inflation, maybe a moderate to high amount of inflation. So it's good to still have money in stocks because stocks represent companies, and they're tangible, and regardless of the value of the dollar, their infrastructure, and they can adjust their prices of what they sell, so they become more valuable in terms of the nominal value of the US dollar. So Campbell's Soup Company, that's my first pick there. The second pick is a utility company known as the Southern Company. Southern Company is a big utility company in the South, hence the name the Southern Company. They also have a pretty nice P ratio of less than 16. They pay a great dividend of 5%, 4.93%. And if we want to go down and see what they do, they engage in generation, transmission, and distribution of electricity. Very straightforward. They also construct, acquire, own, and manage power generation assets, including renewable energy facilities, and sell electricity in the wholesale market. and also distribute natural gas in a few states here. I'm not going to read through the entire thing, but those are my 2 stock picks if there is a depression. Campbell's Soup Company and the Southern Company. Do I think you should sell everything and buy these 2 symbols? No, not necessarily, but there are alternatives to holding cash. So if you were going to otherwise just sell maybe half of your stocks and put them into cash, maybe you still sell half of your stocks and put like 20% into these 2 companies to at least get dividends and retain value under an inflationary situation. A lot of people mention gold and silver. I think a lot of people have this impression that if there is a depression, everybody's going to somehow start trading in gold and silver for their crops and go back to a barter system. I don't think that's really realistic. And if it is, then everybody who lives in an urban area is going to starve because there isn't enough family farms and things like that in the urban areas to really feed people. In a situation like that, it would only really apply to people who are outside the cities. And I'm not really a doomsday prepper. I do think that there is a way to benefit financially from being smart and having a little bit of foresight. I don't necessarily think that holding gold and silver is going to save you. And in that situation, it's probably just better to hold ammo in vast quantities because that would be probably the tradable good. If it was like 40 years ago, I would say cigarettes because cigarettes were the barter currency, I think in World War II and probably in other times. I guess cotton bales used to be a currency back in the South a long time ago too, but they got away from that, thankfully. I kind of want to stay on topic here with stocks. So under a situation where there is a depression, both of these companies are required to continue for lives to continue. I mean, people will continue to need to eat food, and people will also need to have electricity. You can do your own research on other companies that you might think would do well under a depression, and please put them in the comments. I'm really interested to see what you guys have to say. The first thing that I would do is think of products that are indispensable, things that people have no choice but to buy, and go from there, and then look at valuations like PE ratio. Something like a Tesla, probably not super necessary under a depression situation. I do think there are probably going to be some technology companies out there like Tesla that will, revolutionize certain industries that will continue to go up even if there is a recession or depression. This is about, making your portfolio safer. And I can't, in good conscience, give you a risky stock and say this is how you can make your portfolio a little bit safer. That's for other videos. That's for the to the moon videos where I'm talking about stocks, maybe penny stocks that might go up 30% the next day or down 30%. But Campbell's Soup Company and the Southern Company are the 2 that I've identified as potential safe havens during a downturn. There are other companies that won't be too bad to invest in my opinion. Walmart's one of them, and Kroger, and Albertsons to a lesser degree, because Albertsons is so overpriced that I think people will start moving to cheaper grocery stores if they have, if there is a depression about. But grocery stores can also change what they're selling, change their prices, adjust to the situation. But I do believe that they will come out of it on the other end without going into bankruptcy. That's one of the most important things. Yeah, so hope you enjoyed this video. Please comment if you have any stocks that you think will do well under a depression.